Hello, and thank you so much for joining us for our webinar today on investing without borders, how to invest your retirement account internationally. My name is Larissa Greene, and I'm joined by my colleague Corey. And in just a moment, we're going to take you through the steps for making investments outside of the US. I know we get this question a lot. People will say to us, but you have to invest in US based assets. Is that correct? And the truth is that you can invest internationally in just about anything. And we're going to talk shortly about how IRS rules apply to international investing. Again, my name is Larissa Greene. I'm with Advanta IRA. I've been with Advanta since 2011, so I'm just beyond my 11 years with Advanta. I do education and business development for this group, and I have been doing this role for probably about 9 years now. When I started back in 2011, I was doing check coding, transactions, opening new accounts, and sort of every facet of the self-directed IRA business, so I'm very familiar with each of the processes that we have in place for helping our clients invest. And again, I'm joined by my colleague, Corey. How are you doing today, Corey?
Hey Larissa, I'm doing quite well. I appreciate you for the introduction. Just so everyone knows, I've also been with Advanta since 2016, so I'll actually be hitting my 6-year mark next month. I spent most of my time as a client account manager, so I've processed thousands of investment transactions for clients, but about 2 years ago, I switched over to the education and networking based role that I'm in now, providing different education and networking with different groups in the Western North Carolina, Eastern Tennessee area. So we're very happy to bring this content to you today. As an account manager, I've seen plenty of clients invest in either South America or overseas. So it's a real interesting topic that Larissa and I are happy to have put together for you guys.
Great, thank you, Corey. A little bit about Advanta. We've been in business for almost 20 years. Actually, coming up, I think in February will be our 20-year anniversary. So we're all very excited about that. And we hold qualified accounts, and that's what we've always done. So helping people invest their retirement accounts into alternatives, anything outside of the market. And we have always been the same people doing the same thing. So we're here in the Largo area or Tampa Bay area of Florida. And then Corey mentioned where he's at. And then we also have another office in Atlanta, Georgia. But our back office is located in Florida. And so basically, we're handling all the paperwork for clients here in Florida. But we can help people anywhere as long as they have a US based retirement account. So we're going to talk about international investing, and probably people don't think about this too often, but we do even have clients worldwide. You just have to have a US based retirement account in order to self direct it through Advanta. So that's something that we do see on occasion. We have clients sometimes even join our networking events from abroad. So I think that's really great. We have 2 billion in assets under management, and I believe that we are at around 9,000 clients. I don't have the current number, but it should be right around 9,000. And so we're looking forward to continued growth. And something that our clients all receive that we do differently than our competitors, everyone with us receives concierge style personal service, a dedicated account manager, and that person is with the client for the life of the account. So if you establish an account with Advanta, basically we're going to assign a person to help you with that account, and they can help you with everything from making investments through to just simply making contributions on the account. So, that gives you one point of contact, and we have just found that with this strategy, it helps for the rapport our clients have with their account manager. Our account managers then know what each client typically invests in, but each account manager is trained to help clients in any types of investments. So if you are buying real estate, for example, in a foreign country, but you also want to invest in cryptocurrency, your client account manager can help you with all of those investments. A little bit about what we do not do is we do not provide investment advice, legal advice, tax advice. We don't endorse any products or sell anything at all. We don't do any due diligence or guarantee any investments. And so it is completely up to the account holder to make sure that they understand the investment, do the due diligence, and feel comfortable with that investment before proceeding. If you ever have questions, we may be able to refer you to attorneys and accountants, maybe even financial advisors that can assist you with those questions. Just keep in mind that our role is a record keeper for the retirement account. We are not advisors. Some key takeaway points of this webinar, and I know a lot of times when we talk about different rules and different structures of investments, it can all seem a little overwhelming. So we just want you to remember that the IRS limitations on retirement account investments are simple: no life insurance and no collectibles. And that's going to apply to investments abroad as well. And so we try to keep it really easy and simple for you, just keeping in mind those two asset classes are not allowed. You must maintain an arm's length away from any investment that you're making. And that's, again, true for US based investments and abroad. You want to make sure that, for example, you're not lending money to yourself or to your family members that are considered disqualified, that you're not having a current benefit from the IRA investment. And then the last item here is invest in what you know or are comfortable with, and always conduct your own due diligence. So this applies for investing here in the US and abroad, making sure that you're doing any due diligence that needs to be done on that investment. I always like the example of, let's say that you're lending money in the form of a mortgage or deed of trust. If you are lending money, you want to make sure that you not only know your borrower and are comfortable lending to that borrower, but because that loan is going to be secured to a piece of real estate, you want to make sure that you do due diligence on that piece of real estate as well in this case. So that's always a good example, making sure that you're looking at the investment from all angles and maybe getting some professional advice when doing so.
And Larissa, real quick, I just wanted to add, we do have all the attendees muted today. I see someone's used the hand raise feature. If you do have any questions for Larissa or I throughout the webinar, you can go ahead and use the question box in the GoToWebinar window. Ask your questions. If they're relevant to the slides we're covering, we'll go ahead and answer them and stop each other accordingly. If they're not relevant to a specific slide we're covering, we'll still cover some miscellaneous questions at the end as well. So please familiarize yourself with the GoToWebinar window that you all should have on your screen. There should be a box specifically for questions, and you can go ahead and jot them down there, and we'll review them and address them as we go. Thank you, Larissa.
But yeah, thank you, Corey. You know what, that's a good point, because I did forget to mention that. So thank you. And also, we do have the slides attached as a handout in the handout box. So if you want to download them now and jot some notes down, or if you wanted to save them for review for later, you certainly could do that. They're in the handouts box, again, on the control panel, typically located at the right-hand corner of your screen there. So going on, what is a self-directed IRA? And this is important to our business. We are simply talking about investments that you choose outside of the market. So remember again that Advanta does not provide any investment advice, and we also don't sell any investments either. So it's up to you to not only find those investments, but also bring us the paperwork so that we can help you make that investment through the retirement account. And so a lot of times I meet people, and I'm sure Corey has come across this as well, that say, well, my retirement account is self-directed. I have it with my brokerage firm and I get to choose the investments. But our definition of self-direction is actually much broader, in that we're talking about specifically private investments that you go out and find. So if you don't have an investment class in mind, or you don't have an asset in mind for the account, we don't sell anything. So it's going to be up to you at the time that you move your money over to start looking for an investment. Our clients tend to be very entrepreneurial. They're out there putting their money to work for them, and we're just simply acting as the record keeper in that case. And so what do we typically see in an IRA? Well, real estate, of course, is the number one investment that we see. And then, of course, there are other assets sort of based around real estate that we see really often. So notes and mortgages. So for example, lending money and having that money or that note secured by a mortgage or deed of trust. That's something very common. Private placement. So a lot of times people invest as a limited partner with their retirement account, and then that partnership is maybe investing in real estate. That would be pretty typical. But we also see precious metals, foreign currency, futures trading, and the list kind of goes on. And I think we do have some more examples of that as well. So why haven't you heard about a self-directed IRA? Just very simply, there's not a lot of administrators out there like Advanta willing to hold private investments. Basically, we have made it a business decision to only hold private investment. This is our life's work, basically, to hold the investment that you choose and help you with the paperwork. And the reverse of that would be a brokerage account, and typically they're unwilling to hold private investments. And so we're not competing with your brokerage firm. We're just filling the gap in the industry, and it is pretty typical that people just move over the amount they want to self-direct. So they might have an investment coming up for 100,000 or 150,000 that they want to move the money over for. And so they typically do still retain their brokerage account as well and use us as a way to diversify. Less than 4% of all, and we have IRA investments on this slide, but it's actually all retirement accounts, are truly self-directed into private investments. So that includes 401ks and government plans and 403bs, and the list goes on, but less than 4% of those are truly self-directed.
And one point to note about that 4% figure is I actually looked, Larissa, at a statistic earlier this year. As of Q1 of 2022, there was $37 trillion in US-based retirement accounts. So the breakdown there is really only about 1.5 billion in self-directed accounts. I'm sorry, 1.5 trillion rather in self-directed accounts in the whole industry of 37 trillion. And it was actually higher in Q4 of 2021. It was up to 39 trillion. So it's a really large basis of US investors and US individuals that have retirement accounts that just genuinely don't have the knowledge or understanding that self-direction is even an option. So that's why we do a lot of this education for all of you listening and participating, and maybe checking out some of our other educational content out there as well. But having said that, I do want to explain that there are all types of plans that the US based retirement system offer can be self-directed. So you're mostly familiar with your traditional and Roth IRAs, but we also offer SEP and simple IRAs for small business owners, individual 401k plans if you run a business that has no W-2 wage earners, and then also education and health savings accounts can be self-directed, and you can always roll over a former employer plan to a self-directed IRA or solo 401k. If you've left any employer that had a retirement plan, that is money that without any taxable consequence, you can transition into a self-direct strategy very easily with the help of Advanta and a rep like Larissa or I walking you through that process. Now, why do people choose to self-direct? Just in general, when they find out that it's an option, it becomes a new source of capital for investing that they're already doing. So if you're already a real estate investor or already doing different alternative investments, when you find out that you can tap into your tax sheltered or tax free retirement money to do so, it's a really great way for people to do that. Some people get fatigued with the stock market. I myself have a retirement account in the stock market, as well as self-directing a portion of my retirement. And to be honest, I feel more and more every day that I want to move more over to my self-direct strategies. But again, that's my personal opinion. Everyone's due and viable to have their own. And the tax benefit as well is another reason people choose to self-direct. When you realize that you can make real estate investments and sell a piece of real estate that it would not be subject to any capital gains tax or other types of taxes that you can avoid by investing within a retirement account, it's a great product and shelter for some otherwise applicable taxes when you're investing. Now, the rules for self-directed investing are simple. As Larissa went over on the key takeaway point slide, you can't invest into life insurance policies or hard to value collectibles that are subjective in value. The other rule or stipulation that the IRS holds is investing with disqualified persons. So a disqualified person from you yourself would be your spouse, yourself as an individual, and your parents and children, anyone up or down your lineal tree. So you can partner on deals with disqualified persons, but you can't sit on the other end of the table from that person in a deal. You can't buy a house from a disqualified person. You can't let a disqualified person be a tenant in real estate that you own. You can't issue a loan to a disqualified person. So those are the types of rules and the types of regulations the IRS holds, whether it be domestic or international, they all still apply, but it is pretty simple in context, putting into scope of all of the different things you can invest into with a self-direct account. And having said that, I'm actually going to cover a few slides here with just some general asset classes and specific assets in these classes that you could consider maybe for your own interests or goals. So we look at real estate. You can hold a single family home or a multifamily home for short-term, long-term, or rehab projects. Condos, mobile home units, an actual individual unit or an entire park, whether it be ownership directly or in a syndication style capacity. Real estate investment trusts, and even tax deed and liens. If you're someone that's just getting your feet wet with self-direction and you don't feel comfortable putting a whole large chunk of your retirement earnings aside for self-directed strategies, you can start smaller, pretty much with contracts or tax deed and lien investing, where you're just using a few $1,000s and you really could turn a big benefit and a big profit on those smaller investments. There are paper assets you can invest into, like Larissa covered, with mortgage loans with a secured lien against a property or any other asset in case your borrower defaults. Tax deed and lien investing, like I just referenced. Unsecured notes. So if you're comfortable and you truly trust the person you're willing to lend to, you can issue a note where the piece of paper, the original loan, is the only document that secures that note, and really have a lot of hope and faith that they're going to pay back at the interest rate and at the maturity points that you set as the account holder. A few other paper assets listed there. Other alternative assets that we see are investing into LLCs, which we'll cover a little bit more thoroughly in one of our case studies this afternoon. Investing into actual farm animals for breeding rights, for use if they're going to be turned into any livestock or things like that. Movie projects, precious metals. You could own heavy equipment and lease that equipment to contractors, forex and private stock accounts, commodities, and even oil and gas rights can be held in a retirement account.
So now we're going to talk about the rules for investing outside of the US. And, actually, just very recently, I had somebody asking me about this, and I have a slide that I'm going to cover kind of our conversation on coming up here. But again, just to reiterate, the IRS rules for international investing are the same as domestic: no life insurance, no collectibles. And Corey also talked about disqualified persons. It's important to verify legal stipulations where you plan to invest. So this kind of falls into that realm of Advanta is not going to do any due diligence for you. And so we're also not going to check into the country's requirements for foreign investors. So you want to make sure that if you're investing in something outside of the US, that you're checking with the country you're investing in and finding out what, as a US investor, would be required. And we've seen a lot of different asset classes outside of the US. I have clients that own property outside of the US in several different countries. I know Corey mentioned Costa Rica. And so that's a great example. We have a client, or actually, we have several clients that own in Costa Rica, and they did have to establish the Costa Rican equivalent of an LLC, so a Costa Rican entity, in order to make that investment. So that country requires that they set up an entity based in the country first. The money goes to that entity's bank account, and then it can make the investment. And I'm not sure which countries require that. I really don't have any idea, and Advanta does not do the research for you. So you want to make sure that you're working with legal counsel that can help you with that. So there's certainly attorneys in the US that can help you with foreign investments, and certainly whatever country that you're looking to invest in would have legal counsel that can help you there as well. So that's very important, understanding what would be required. In most cases, you can choose to invest a retirement account directly into that offshore LLC or the equivalent of an LLC in that country in order to make those investments. And again, I'm really not sure what might be required, but on many occasions, our clients use a foreign entity in order to make those investments. Whether or not they are required, I don't know. And then be careful when the investments are made because of currency changes. So, and I'm going to talk about that on a slide coming up, but just remember that it's going to be US dollars when it's deposited to your IRA account. So being aware of that. I actually did very recently have somebody ask me about that process, and so I'm going to go over that for you in just a second. So when you're choosing to hold the asset directly through the IRA custodian or administrator, you're going to work one-on-one with your client account manager. And so let's say that you find an investment you'd like to make, and you can make that investment directly through the retirement account. Then basically we're going to ask for that paperwork for the investment. We're going to review it to make sure the IRA is shown as the investor. We have you read and approve it. So this is exactly the same as the process for a US-based investment. I'll give you an example. We have a client or a few clients with investments through bank accounts in other countries. So one example would be like Sweden. So if your IRA held a bank account in a Swedish firm, then you would just basically say, here's the paperwork to set up the bank account. We tell them, hey, it has to be set up in the name of the retirement account. Once that's done and the client reads and approves all of the paperwork, then we can send out the funds for that bank account. Now, from there, the client can utilize that bank account in order to buy bank bonds or stock or whatever it might have been that they wanted to invest in. And so that gives you an example of how it works. And for those of you that have an IRA account with Advanta and invest here locally in the US, you know that that process sounds very familiar. We're simply looking for paperwork that displays or shows basically that the IRA is making this investment. Once your investment completes its life cycle or you want to sell that investment, the process again is the same. You just let us know that money is going to return to the IRA. Remember that we don't help you sell the investment, meaning we don't find a buyer for that asset. And so, for example, if you hold foreign currency as an investment and you're looking to liquidate that asset, you do have to find your own buyer or maybe go to an exchange in order to exchange that currency. But basically, once that's done or the asset is liquidated, funds are going to come back to the IRA, and again, they're returned as US dollars. So again, using an LLC to make the investment, and I know Corey mentioned we do have a case study of this for you so you can see what that looks like, but you may be required in some countries to hold through an LLC, and if that's the case, we just call that a checkbook IRA. So whether it's a foreign entity or an LLC within the US, it's just essentially giving you checkbook control. And there may be other purposes behind it too, but basically setting up an LLC, having the IRA named as the sole member of that LLC or of that foreign entity, and then naming yourself the manager. That entity will have a bank account. The IRA money goes to the bank account, and then you're ready to invest. And the rules or basically strategy behind that for investing in foreign investments as well as US-based investments is basically the same, making sure that the ownership is based on the funds each party puts into the LLC. So if it's not just your IRA, let's say it's your IRA and your spouse's IRA making this investment, then they're going to be partners essentially into this entity. And so therefore the member information would be reflected on that. And the percentage of ownership is directly related to the amount of money brought to the table by each IRA or each individual or however many partners are going into this entity. And that is especially true when dealing with disqualified persons. So if my spouse and I use our IRAs to invest together into an LLC and then we plan on making foreign investments, we just want to make sure that if we are going to own it 50-50, that each of our IRAs can participate with 50% of the amount of money we want the LLC to be funded with. When adding money to the LLC later on, it must be based on the percentage of ownership. Again, very important when you're talking about disqualified persons. And being mindful that IRAs, for IRAs that have to take a minimum distribution, money must come out of the LLC to the IRA or from the, foreign equivalent of an LLC in order to meet the RMD. The money comes first to the IRA, and then we distribute the money in the case of required minimum distribution. So a couple things to know and a couple things that we have come across, and even I personally have learned sort of as we have gone through the process with different clients on foreign investments. Currency exchange happens at the bank level. So this is very important. If you tell us that you're going to invest X amount of dollars in, the country's currency, we're going to say, okay, well, we can, at the time that we send the wire, we can make sure that we are electing to send it in that currency. And we don't know until we go to do that, take that step with the bank to set up the wire, what that will be in US dollars. Many of you will be very familiar, but the currency exchange rates change constantly. They're always in a state of change. And so until we get to that part of the process, we don't know how much we'll need from your IRA in order to meet the equivalent of that currency. So keep that in mind. So if you tell us to send X amount to whatever country in their currency, then we're going to work with you on that very closely to make sure it gets done. Once the investment is funded, if they will be returning income to your IRA in their currency, again, when we receive the foreign wire to our bank, the bank automatically exchanges the currency to US dollars at that time. So upon receipt, they're going to do the exchange, and then we're going to receive the deposit in US dollars to your IRA account, and that will be reflected on your statement, or basically letting you know once we receive it by email how much we received. When it's being sent by the investment provider, they have at that time typically the opportunity to send in either their currency or US dollars. And so if they choose US dollars, they might be able to alert you on their end how much they're sending. If they're sending it in their currency, then it's just going to be an estimate until it comes through and the bank does the exchange. So that kind of gives you an idea of how it works. There is no additional charge for the bank to do the exchange as it comes through, but normal wire fees will apply. Advanta IRA requires English translation of all documents, so just making sure again that you're aware of that and you're working maybe with somebody from that country, some legal entity or something like that, if you can't translate it yourself, of course, for an English translation of those documents. We need to be able to review the documents and make sure the IRA is properly titled on the documents as the investor. And we also, although we're not giving investment advice, we're reviewing the documentation to make sure that everything is correct for the IRA's purposes. And then something else that you want to be aware of is that there cannot be a current benefit to the IRA holder for making the investment. And the example that pops into my head, and one that Corey and I discussed, is when you're purchasing real estate, for example, in another country, sometimes that offers citizenship to the owner of the real estate. So I've heard it as golden citizenship, basically, for making an investment. And if that is the case, that would be considered a current benefit to the IRA holder. And so that would actually make that investment prohibited for IRS purposes. So looking at things like that. So, if you're making an investment into another country and by buying real estate there, you can then go on vacation there, that again would be prohibited. So remembering what the rules are and keeping in mind that they do apply to the retirement account, even when you're making foreign investments.
All right, thank you, Larissa. With that, I do want to just make 2 points before I jump into this first case study. Larissa touched a decent amount on setting up an LLC, and we have a few questions that have come up in the question box about the LLCs. So specifically, isn't this all simplified if you already have a checkbook IRA with Advanta? And then couldn't a checkbook IRA fund an LLC, let's say in Mexico, to buy property? So yes, the process there, if you've already got a checkbook IRA with Advanta, you can use that checkbook IRA to essentially be the member of a new LLC that you set up in Mexico. So it really would be a process for an individual that's already got an existing account with us to just take what we're saying and move it one level down, if you will, from your checkbook account to the international account that you would need to set up. And again, you might not need to set up that international account. You may be able to do the investment directly through your Advanta US-based LLC, but just check in this case, in the question that came up, check in with Mexico's rules and regulations. I was doing some due diligence for this webinar specifically, and I noticed another South American country that would not allow a US-based entity to own real estate in specific sectors of the country. So in rural areas, they were not letting outside sources come in and buy their rural land, but you could buy properties within a city or a metropolitan area. So just things like that as part of your due diligence as the account holder you'd want to look into. Real quick, before I jump in, there's one more question. Do we have CPAs that specialize in self-directed IRA tax implications to recommend? Yes, you could reach out to Larissa or I. We do have CPAs and tax preparers that we could recommend. A few of them are actually active clients of ours as well. So not only are they familiar with self-directed investing, they're active self-directed investors themselves. So just reach out. If you didn't catch our contact information at the beginning of the webinar, we'll have it up at the end of the webinar again as well. Please keep your questions coming. I'm going to go ahead and jump into case study 1 here, but please ask your questions. If they're relevant, we'll answer them. If they are not relevant to the case studies, we will go ahead and cover them at the end of the webinar as well. So with case study 1, purchasing international real estate. So in this case study, we're just going to purchase real estate directly in the name of this individual's retirement account. I've got Stephen, who has a large retirement account savings and decides he wants to own a rental bungalow in South America. He researches legal restrictions in several countries of interest and decides to buy in Ecuador. Just for your reference and clarification, I did look up if Ecuador will allow US-based entities to own real estate, and it is allowable. So in this case, Stephen, i.e. myself, has done some due diligence, and I have Stephen deciding to hold the property in the IRA without checkbook control. So what Stephen does is he opens and funds an account with Advanta. He makes an offer to purchase the property using proper titling, which is something he would collect from Advanta, from his client account manager. For your reference as the viewer here, it'll be pretty much Advanta IRA for the benefit of Stephen's first and last name, and then his account number. He would submit a purchase authorization form to Advanta and also read and approve all of the documents for Advanta to execute the closing transaction and handle the expenses of the property moving forward. So when we're processing a real estate transaction, we're collecting the client's approval of all the closing documents needed for the closing table, and also typically a payment authorization letter, so that when we get expenses for utilities and other types of expenses that property is going to have moving forward, we are authorized to pay them. I'll go over that a little bit further in the next slide as well. But on Advanta's end, we receive, review, and execute the closing documents after collecting Stephen's approval. We coordinate the closing transaction with the closing agency or attorney, and we make sure to receive the original ownership documentation. So whatever is recorded in the jurisdiction of choice that shows Stephen's retirement account owns the property, we hold those documents in our safekeeping vaults so that they're safe and protected and are able to be accessed in the future. And we also, again, pay any expenses and receive any income generated by the property held directly in the IRA. So moving forward, overseeing this international piece of property, Stephen requests checks for any expenses that come up via his Advanta online portal. Any client can always access the online portal 24/7, submit a payment request, anything received prior to 12 noon Eastern. We typically get that check out the same business day. Outside of 12 noon Eastern, that check will go out the next business day, or ACH wire, whatever the funding method requested is. He can choose to hire a property management company if he would like to, or self-manage the property. If he happens to be living internationally there is no sweat equity allowed. If you've seen any of our real estate content, it's a very big sticking point from the IRS's side that you're not conducting any sweat equity. That even boils down to changing a light bulb on the property, painting it. You personally cannot do anything to physically update or improve the property. You have to outsource that at the very least to a handyman. The IRS does not make you get a certified contractor, but you personally cannot do anything that would be constituting sweat equity. Tenants, renters, and property manager will send the IRA proceeds directly to the retirement account. And if there's partial ownership, like Larissa referenced a little bit in the LLC slide previously, Advanta can only accept the income relative to the retirement account's ownership in the property. So let's just go back and say Stephen bought this property 50-50 with himself individually and his IRA account, and then he generates $1,000 of rental income in a month. 500 of that needs to come deposit to Advanta, and 500 of it needs to go to Stephen's pocket. Stephen decides all rental terms and chooses the tenants and renters or outsources that to a property manager. If he decides to sell, he is responsible for finding a buyer or working with an agent to find a buyer. The funds flowing back into the retirement account must be in US dollars. And again, we've stressed this a few times on this webinar. Be mindful of currency exchange rates and requirements. Again, a third-party property manager is applicable in real estate scenarios, whether it be domestic or international. Be mindful that they're going to charge a rate, and that's something that you negotiate with and determine who you want to work with as a property manager. In this case, the property manager would handle all of the income and expenses and just send additional proceeds to the retirement account. So there's no need for checks from tenants to come and be split or anything. That all goes directly through the property manager. And then additional proceeds are sent along to the retirement custodian. In other words, Advanta at the end point.
So we're going to
So
talk about, go ahead.
I was just going to say, we've got case study 2. We've alluded to it a few times on international investing with an LLC. Larissa is going to go ahead and take over here. Sorry, Larissa.
Yes, no, thank you, Corey. Yep, so we're going to talk about using the LLC and how that works, and then for what types of investments we have seen that for. I think this is a very interesting case study because you're going to see, and also we'll talk a little bit about it as well, that, really, truly our clients have been very entrepreneurial when it comes to their investments. Corey, I can't change the slides. Can you move the...
Sorry, we need it on. I was just reading a question that came in, so I don't know if my mouse control had distracted there. I
Yeah, there you
apologize.
go. Perfect. Thank you. Okay, sorry about that, guys. So in this example, George wants to establish an IRA LLC overseas to hold public stock in a foreign market. He determines the country and the procedure to establish the LLC. So remember, we're not going to do the research for you, so George is going to do that. He's going to, of course, open and fund his IRA account and provide the operating agreement, or the country's equivalent of an operating agreement, that will show the IRA as the sole member in this case, and then George as the manager. He's going to manage all of the activities through the LLC once it's funded and communicate to Advanta IRA if he has any questions, and of course the annual value of that entity. We will assure that the LLC operating agreement shows that George's IRA is making the investment as the sole member. We will actually have George read and approve all of the paperwork. And again, if this is not in English, then we do require the English documents so that we can review it and make sure that the information we are looking for typically for an IRA is in those documents. So what do we look for? Well, we're going to look to see that the entity is manager managed instead of member managed, because George is not a member. His IRA is the member. And so we'll review that documentation to make sure that it's manager managed. We'll look for the member information, again, that it's the IRA. We also review the documents to make sure that there is nothing in this operating agreement that would be considered prohibited. So for example, does the operating agreement outline that the manager can use assets of the LLC for collateral? That would be considered prohibited. So if we see something like that, we're going to let the IRA holder know, hey, that is not allowed. This language needs to be taken out, and you want to make sure that you're not doing anything prohibited within this entity. So there's just an example of things that we're looking for you. And then once we have everything read and approved, we will sign the documents. If we did get a translation from George in English, then we will also sign the original documents for that country in their language. And then we will fund that investment to the bank account for this entity. So that's kind of what the process looks like for this. And again, if you guys have an account with Advanta, then you're already familiar with this process. And there's really not too much different there. Again, George names himself as the manager, and I already kind of went over some of these requirements. You're going to see the member information there: Advanta IRA, FBO, George Davis, IRA number 1234, as to a 100% undivided interest. From there, once the entity is funded, George can now make the investments that he wants to make. And so if he was looking at a trading platform in the foreign market, then he can do that through this entity. And again, if he's not making this investment directly or through the LLC, but instead directly through the IRA, as long as the country would allow it, then finding out what would be required. So we did have clients who made investments into a trading platform abroad, and that trading platform actually required something unique called an apostille stamp. And that basically was the certification from the state of a notary. And so not only did the document have to be notarized on the signature for the client, but we then had to take that paperwork and send it to the state. And then the state would stamp it with an apostille stamp saying that this notary does exist. So it was like one extra layer that the trading platform did require. And so again, understanding what requirements might be needed if you're making the investment either directly through the retirement account or through an entity that the country might require you to establish. So his overseas LLC is funded and he can make any investments through the name of that LLC. So that might be a big benefit to George if he's making investments, let's say on a trading platform, and he wants the account with the trading platform to be in the name of an entity rather than in the name of his retirement account. He's going to sign agreements and execute all trades as the manager of that entity. He would move forward with any investing. He can decide to diversify through that entity within the country. And again, just being aware that he has to do so within the rules. So investing abroad does not allow you to go around the rules, and utilizing an entity like an LLC also does not allow you to go around the rules. So just being aware of all of that. Corey, I think we had some questions pop up. Did you want to look at those before we go on?
Sorry, I was muted. Yeah, I did look over. There are 3 questions. I'd be happy to read aloud and we can address them together. The first one, I think it's more so, and I was just taking a note for us to follow up with this individual's client account manager and just touch base, but I'll still read it aloud. I made a loan through Advanta 6 years ago. Loan holder unable to pay. Wants to pay with a property in Colombia, SA. After trying to transfer after trying to transfer property to Advanta account multiple times, gave up because of country's restrictions in transfer of property. Any other options that you can recommend? Honestly, I think that's more of a due diligence process on what those countries' restrictions are. But again, for that individual, I have taken down their name and I plan to look up who their client account manager is and try to touch base to see if we can't help any further in coordinating something like that. But again, there is a level of due diligence that probably falls in that. Would you agree, Larissa?
I do, and just to sort of address it for the group, and this is not legal advice by any means, but just thinking about how we talked extensively about how countries might require an entity established in that country. You know, if you had an attorney that was familiar with foreign investments, they may be able to give you some guidance here, but I wonder just maybe if simply forming an entity in that country that would take possession of the real estate and then having that entity assigned to the IRA would work. I don't know. Again, this is not legal advice, but just addressing it sort of for the group again, a great reason to maybe get an attorney that is involved in foreign investments, involved to help you understand what might be able to be done. And, you know, a lot of times we kind of turn to attorneys and sometimes people will tell us, well, you know, that could be very expensive, but sort of looking at it from the other side, one of our partners, Alex, always says it might seem expensive, but it's an inexpensive way to ensure things are handled properly. So, you know, maybe looking to an attorney to assist you with that, and sort of for the group, you know, looking at what might be required in order to take possession of a property that is in another country. So something abroad might have a requirement like that. I don't know.
All right. And I think everything you said falls right in line with my thoughts as well. So the next question we've got here, for a short-term rental within an IRA, when you go to the store to purchase the items in order to set up the short-term rental, or when you host your own property by managing the bookings, etc., online, would those be considered sweat equity? Now, my understanding of the rule and regulation and my interpretation would be that those are not considered sweat equity. I always picture it akin to being a general contractor on a project, where that may be in context some general contracting work, as long as you're not actually bringing those materials home from the store and actually, cleaning the glass windows or putting a coffee maker together, just some things you might think are minute, but if you're just getting the raw materials and bringing them to the short-term rental property, and then also managing the booking directly if you're the one that's actually setting up and doing the Airbnb or the VRBO, as long as you're not paying yourself for that exact service rendered and you're just doing it as the owner of the retirement account, I believe that that is not considered sweat equity. That would be my interpretation. Also, this is kind of a gray area, so we would definitely always implore you to consult your own legal professional for that. Larissa, what would your feedback be on this question?
I think it depends on the extent that you feel you have to be involved. I think if you feel like maybe this is sweat equity, I'm very involved in this, then that would be the time to hire a property manager. Again, sort of going on that idea of, well, it can be expensive, but it's an inexpensive way to ensure that you're doing things properly for IRS purposes. So, with a long-term rental, of course, you would put a tenant in place and sort of set it and forget it, so to speak, and you're never really involved in anything on the day to day there. Typically, you're having your tenants reach out to you if they need services, but then you would hire a vendor to provide those services, or maybe you even have it set up for your tenants to call vendors for those services. And so there's a whole lot less involvement. When you're talking about a midterm rental, maybe that is less sweat equity or no set sweat equity as well, but maybe you have a property manager just again to ensure that you're really not involved in the day to day. And then when you go to short term rentals, if this is something that you are dealing with on a very regular basis, I feel like you will know when you're providing sweat equity. And if at that point it is a day to day job, so to speak, then, or even a weekly job, then that might be sweat equity. And I would caution you again, like Corey said, to get a legal opinion on something like that, or hire a property manager. Again, this is a good way to ensure that you're properly handling an investment within the IRA account. If it's a short-term rental outside your IRA, of course, providing sweat equity is not a problem, but maybe this is the one that you do hire a property management company for, especially if you have to buy raw materials. If you do have to stock the toilet paper, for example, going out and purchasing those products and bringing them back to the IRA or back to the unit, on behalf of the IRA, that might be an issue. We don't have the case law on it in order to know for sure. And so at that time, I would consult legal counsel. And I would also say that if you feel like you're providing a lot of work for that investment, then that might be the time to get a property manager involved. Somebody also asked if short-term rentals generate UBIT. I would talk to your CPA about that. It's possible that it does generate UBIT, and so I would suggest asking your CPA.
And yeah, we did just have a webinar on UBIT and UDFI that Alex covered, I want to say a week or 2 weeks ago. It really is a great transition into our next slide just to talk about our educational content. If you enjoyed this webinar, please be aware that we do put out a lot of educational content, typically 2 webinars a week. We also have a blog and a podcast. Sometimes if we're in your area, we do lunch and learn events as well. And keep in mind that Advanta's educational content is always free. We never charge for our educational content. We're trying to expand people's knowledge and understanding of self-direction. So any interest that you have, check out if we've got any other content on that topic, share it with your friends or relatives that could benefit from it. And we are always here to help on a one-to-one basis as well. Getting a new account set up is a very easy process. It takes about 15 minutes for most people to complete our account application. We pair you with that dedicated client account manager to be your one-to-one resource on the account once it's open and established. If you have any questions, we're experts in what the IRS does or does not allow within your retirement account. You be the expert in what you invest into. Funding your account's very easy. Typically, there's no tax consequence for getting an account open and funded. And then you can start investing typically within about 10 to 14 days on average, speaking conservatively. You can get an account application turned in and then turn around and fund it into your first self-directed deal. And finally, to wrap up, we are Larissa Greene and Corey Daharsh. We appreciate your participation today. Here's all of our contact information. If you have any further questions, please feel free to reach out to us. Larissa, thanks again for doing this webinar with me today. It's a very interesting topic, and I hope that we've been able to help our participants in learning how they can approach it.
It was great. Thank you, Corey. Thanks, everybody.